Well, as millions of dollars pour into the Trump administration, a nearly record high number of cars are being repossessed
Mm.
as more and more Americans continue falling behind on their auto loan payments. This year, more than 7.5 million cars have already been assigned for repossession. That
How insane. 7.5 million cars have already been assigned for repossession. That is insane. So people are living beyond their means, or maybe they were within their means, but they lost their job, or some catastrophe happened where they couldn't pay the payment on their car. And, they don't just repossess your car after one payment, right? They repossess it after maybe three payments, after a few months of missing payments. Then they're actually going to start coming from your car. So people have been missing their payments for months and months and months. And we've seen videos even on this channel of car salesmen or whoever they are in these lots, and these lots are full of repossessed cars. So people are getting their cars taken. People are getting their cars repossessed in this economy. We've seen people lose their houses. We've seen the increase of food. We've seen the increase of everything going on. So people are literally losing their cars. I mean, we just bought a car and we have a loan on it, but we follow this car buying rule that I like. Put 20% down. You make sure the loan term is 3 years. The payment cannot be more than 8 or 10% of your income. So that's something that we kind of go by, or just buy a used car, because you don't need to have these new cars. There's a lot of good used cars. I think it's still a good used car market out there, and they're cheap, and find a car that's reliable.
number, though, is expected to hit nearly 11 million
Wow.
by the end of the year. That's according to data from the Recovery Database Networks. Tariffs have played a part, increasing some sticker prices, with automakers saying they tried to hold off on raising prices when the tariffs first kicked in. But now many companies saying they just can't afford to do that anymore. So
I mean, it's crazy. It's almost like every new car is like $50,000 or more, $40,000 or more. I mean, there's not a lot. There's still a lot of cars that are, $30,000, $20,000, but a lot of those cars people don't want. People want the $50,000 car. They want the $60,000 car. They want the big SUV. They want the car with all the tools and the gadgets. But you have to look at your financial situation. If your financial situation doesn't call for that, then maybe it's time to look for something cheaper, for something that just gets you from point A to point B. A Hyundai Sonata or a Toyota Camry. That's what we had. And it's super cheap on gas and it's super cheap on insurance. People don't think about insurance either. Insurance can be $300, $400, especially if you have a new car and it has full coverage.
joining me now, automotive expert and co-founder of Car Edge, Ray Shefska. Ray, thank you so much for giving us some of your time today. We're hearing a lot of warnings about the auto finance industry as a whole being at a breaking point. Do you agree?
We are seeing signs that the difficulty that many Americans are having in making their car payments is a growing and troubling sign. So yes, I think as we continue to see repossessions move forward and go up, you have to also consider that many of the large banks out there, the lenders, are actually increasing their loan loss provisions because they don't expect the loans that they wrote in the past to perform at the level that they thought they would. And in many cases, they're actually delaying the repossessions by trying to work with the customers to extend their loan terms, offer a couple of months abatement on payments.
Wow, so companies are even being lenient with accepting their payments. I mean, that's just a horrible feeling to know that you're behind on your payments and that your potential car that gets you to where you got to go, that gets you to work, that gets you to the grocery store is going to be taken. So if you don't pay this car back, if it gets repossessed, you still have to pay that loan back. So you can avoid all this. All this can be avoided by properly planning before you buy a car, properly planning before you make a huge financial move, before you go to the dealership and they take advantage of you. They mark up $10,000 on the car or some bull crap. It's what they try to do to us. This is why proper planning is super important. Know how much you're going to be spending on your car. Know how much you're going to be spending monthly on the payment, how much you're going to be spending monthly on gas, on insurance, on maintenance, and then make this decision. then go to the dealership, know exactly what car you want, know exactly what price you want, and don't waver from that, because they will definitely try to charge you as much as possible, because they don't care. They're getting the entire lump sum, whether it's from you, whether it's from the bank, or whether it's from both.
So yeah, the repossession issue is a real concern at the moment.
So, Ray, walk us through that. I mean, how many payments can borrowers generally miss before that big tow truck?
And this is what I was wondering, like, how many payments can you actually miss? Because there's no way that you miss one payment and they're coming for your car right away. They're going to give you an opportunity to try to make up. But when you're already behind, when, you're already say your payment's $600, now you're $1,200 behind, it's hard to make up. But let's look at this. Hold on. $50,000 is the average new car. I'm not going to lie to you guys. We pay $50,000 for our car. Ooh, I know it's a lot of money. But we put more than 20% down, and we make sure it's on a 3-year loan term, and it's between 8 to 10% of our income, the monthly payment is, at least. And we're also investing. We're hitting our marks, we're hitting our saving marks. We have lower expenses, which is one of the biggest reasons why we're able to afford a car that is that expensive. But $50,000, and then wow, look what it was in 2016. $34,000.
Days, the banks become very concerned, and they normally don't like to let it get to a 90-day delinquency. But in many cases, we're seeing that today simply because the banks don't want to be repossessing as many vehicles as should be repossessed. I think they're trying to play a little bit of a waiting game here so that it doesn't sound the alarm bells.
All right, so Ray, lots of families.
I don't know. I mean, I feel like if you let people get away with not paying on time, they'll continue to not pay on time. Are they going to be able to come up with, say your payment's $600? Are they going to be able to come up with $1,800 if they're 3 months behind to catch up on payments? I don't know. I can't tell you, but maybe banks should be more strict about car repossession.
Kind of trying to juggle a lot of different things, trying to do this balancing act. But in your opinion, does some of this also come down in any way to, type of exploitive lending practices?
Well, on the subprime side of things, yeah, obviously we see people being charged 24, 25, as much as 30% interest on car loans.
Oh my gosh. Hold on, let me pull out my calculator, because if they're charging 25% interest on a car loan, that's insane. Because I mean, you put that money in the market, you're getting a 10% return, maybe 12, maybe 7, depending on how good the market's going. But you're losing so much money with a loan term by that much. So if you are going to get a new car on a loan, then you want to have your credit score as great as possible. You want to put a good amount of money down, lower the term as much as possible so you can get a good interest rate on your vehicle. So let's say someone buys a $50,000 car, they put $5,000 down, so they borrowed $45,000 at 20%. You are putting these loan terms on 5 years. So let's say 5 years. That's insane. Can you guys see that? So we have 45,000, 20% on a 5-year loan term, and that's the monthly payment. I believe that people are doing this. $1,000, about $1,100 for a monthly payment. Interest they're paying on this car over 5 years is $26,000. That is a whole nother car right there. They're paying in just interest. This is not going to the principal. Just interest is $26,000. In total, you're going to be paying $71,000 over 5 years for a $45,000 car, which is going to be worth about $20,000. I don't know, maybe $20,000 by the time the loan is done. In 5 years, it might be worth $20,000. You really have to put a lot of thought into this, or it could push you back financially a lot, especially if you're not hitting your investment marks.
And that's onerous for especially the people that already have had credit difficulties. So there is a certain amount of predatory lending that goes on. And then there's other things that exacerbate it for the customers, and that is the cost of maintaining their vehicle has gone up. And as we all know, the cost of insuring a vehicle has gone up.
It certainly has. So how do you think this is remedied, Ray? I mean, is it giving people more leeway? Is that the answer?
Uh, I think part of the answer would be education. A lot of people are financially ignorant to a degree, and they don't actually always realize what they're signing up for and what they're getting into.
And that's what I was saying. You need to go in there with a plan. You have to do your research before you go out here buying a vehicle, because it can put you behind. It can tank your credit score, especially if you get your car repossessed. Have your education, get your education in line before you go out here buying a vehicle, so you're not taken advantage of by the car salesman and by the banks.
And part of it is lenders and dealers trying to figure out ways to work with the customers so that they can stay in the vehicles and continue to make payments.
They're going to work with you. What do you want to pay? What do you want to pay a month? And it's not really about what you want to pay a month. It's about the entire cost of it, the cost of ownership. Like I showed you, the entire cost, the interest you're going to pay on the car, the insurance, the gas, and how much that's going to actually be. Like you saw, $71,000 for a vehicle, but with insurance, gas, maintenance, it might be $100,000. Who even knows? Over a 5-year loan period, you could be paying $100,000 for a vehicle that is going to be worth $20,000 or $15,000 at the end of that loan term.
Right. So, we said at the top of this, more and more Americans are falling behind. So I have to assume that there are some people who are watching this right now who are going to, trying to figure out what they're going to do. What would you advise, people who are watching who may either already be or know that they soon will be in default on their car loan?
If you are having difficulty making the payment, contact your lender. Uh, they want to lend money. They don't necessarily want to be in the car business. So contact the lender, ask them if there's a way to figure out how to lessen the payment for the time being or extend the loan term a little longer while lowering the payment so that it can remain more affordable on a monthly basis. Don't hide. Get in touch with that lender and see if they'll work with you.
Right.
I mean, that's not bad advice. Like, don't hide. Call your lender. Call your bank if you're missing payments on your mortgage. Call your bank. Call the lender. I mean, I wouldn't say extend the loan term so you can have a cheaper payment, because you can pay more interest. And to be honest, if you're not hitting your investment marks, we need to be hitting our investment marks. So we need to get this car payment out the way as soon as possible. Maybe you have to get a second job. I think the best way to not get your car repossessed is to not get in the situation at all. You need to know the rules. You need to know how much you spend on a car. Like I said, I follow the 23A rule, which is put 20% down. The loan term should be no more than 3 years, and the monthly payment should be between 8 to 10% of, I say, your take-home income. Let's say you take home $30,000. 12 months, you're paying $3,000. Divided by 12, so your monthly payment should be $250. Then that should be on a 3-year loan term, $4,000. So you got $4,000, 3-year loan term. We're not even looking at a $20,000 car. We're looking more at a 15, 10, at a $12,000 car if you make $30,000 a year. So the more you make, the more you can get in worth of payments. But this is a very conservative rule, so hopefully you won't be behind on your vehicle. I mean, if you lost your job, you want to make sure you have an emergency fund built up. You might think that you could afford this $50,000 car, but according to this rule, and by having a 36-month loan term, and that will decrease the amount that you pay in interest, this will hopefully keep you within good status of your car and your loan term. And like I said, I think the best way to get out of this is to not get into this at all. Use that rule. Maybe you have to get a $10,000 to $12,000 car on a 3-year loan term. Hopefully you have a good interest rate and you have good credit. I mean, so it's a lot that goes into buying a car. But to be honest, if you're not hitting your investment marks, just go buy a used car for cash. I bought a $2,000 Toyota Camry and I had that car for about 5 years. Kept up with the maintenance on it and it was good to go. So let me know what you guys think about the video. Hopefully you enjoyed this video. And if you did, leave a like, subscribe to my channel, and I'll see you guys in the next video.